Hi guys, today is February the 21st after the market close, and what we are starting off looking here is a chart of S&P 500 SPX on a 15-minute chart. And what I've already done here is that I've put a Fibonacci retracements. And why am I practicing all of this and showing you this thing? Because you need to see that we hit 1530, which is a high on 20th, which is just a day ago, and then we dropped down to 1497 in a day or so, 2 days. So is this move valid to the downside or is to the upside? And because the market made a low, which is the 1497 pivot, and moved up higher to 1505, which closed above the 1500, many bulls are saying, oh wonderful, this would probably get us back against this trend line, which is a great thing to hope for. But this is what is this retracement levels do, and this is how the computers are programmed, and this is how trading usually goes through it sometimes in different hedge funds, different companies, different big institutional traders. They use this tool widely, which is known as the Fibonacci retracements. And what it is doing here is, if you want to look at it, 1497 was the last pivot, lower pivot today, and then we traced here 1505, which is above only about 23-24%, and then we finished the day at 1502, which is, if you look at it, is not even 10% or 12%. So the downward move has not retraced fully, not even 20%, but is finished in the lower quadrant here at the 10% level, which is really hardly a move. And therefore the market is more subject to going further down than going up. Now I could be proven wrong, and this could, something else would change here. Had we retraced up to 38% or 50% to this level 1514, which is a level to watch right now, we would have easily got back into this channel that you see here running here. Once we get back into that channel, we're grinding higher again, and we're in the same game that we were here 2 days ago. But that move did not come back here, even though if you look at today's analysis, you're gonna see a long body candle here, but the body is not long. Let me remove this thing here completely, delete the drawing. You could see that body in the candle is not very long. This is the bottoming tail. You know, you would say, oh, that was the end of the selling, but there's a little bit more selling, I think, left in this, and probably we're going to test new levels here. There's another way to do this thing here, is we can measure from here to there and see the Fibonacci retracement levels, which I will do that here very quickly, and I'm going to put them on here. This is where the move took place, and this is where it went. And take a look at it. We are just 23%. We have retraced 23% of the move here, so we're still in a good shape here, that we may be able to plunge or move higher. But if we drop here to 38%, next support is 1479, and then 1473 level, which is that 50-day moving average. So we're still in the upper quadrants here of the down move, and therefore the retracement is not as expensive as so. But it's still, these are two conflicting things that I just laid out before you, and the market can move. Let's see what it does here. Next support level on at 1479, 38% of the Fibonacci, and then the 50-day moving average, which is at 1473. RUT, on the other hand, the other index, has not done the same thing here. It is also moving here and dropping here, but the bottoming tail is not very convincing. The market, on the other hand, is also overbought, and when these overbought conditions are included, usually it'll try to work off those conditions, which are very healthy. And if we can see the stochastic down here at the 17 or 18 level, let's look at some of the good stocks here that we get a chance to look at it. And that is Google. Is just making a little bit like a flag like thing pattern here. It is trading below 800, which is notable. Facebook, this stock here was Facebook and FB. Let's take a look at it here very quickly. And Facebook is comfortably down below that 50-day moving average and supporting here. Any break below 27, it's a short, in my opinion. Now we may be shorting it. Apple, on the other hand, is still in a downtrend, hasn't done anything. It needs to break that trend line to go up higher. So for now, the market direction still remains to the downside.